Good evening, everyone. I hope the preparation of exam is going fairly well. So I just want us to go through this question. This question is an asset disposal question. And I know from my past experience, or even current, I know that most students do struggle with asset disposal. So I'm just going to focus on the basics. Maybe these basics can help you to answer some of the advanced questions. Okay. Here's a question here. I just want us to look at this question. This question, as you can see, is for the books of Sylvester Services. So we are going to try and analyze these books. Okay. So we need to make sure that we highlight the information so that we can be able to understand better. Okay. Now, if you check here, we have the books of Sylvester Services on the 20th of February 2020. Bear with me, guys. I know 2020 is the 29th. So now let's just say it's 28th of Feb, the end of the financial year. So firstly, before I can continue, I'll make sure that I do compile a financial period or a timeline for the year ended 28th of Feb 2020. Here's how I'm going to do it. Can you see? I'm just going to come up with a timeline like this. Can you see? This shows the beginning of my period. Can you see? If I ended here, end of Feb, so it means I need to have 12 months, unless if they stated otherwise. Okay. So how can I do that? For me to count back, it can be, I can make mistakes. Okay. So what I'm going to do, I'm going to say, okay, because I ended here, Feb, what is the month following Feb? The month following Feb is March. But obviously, I will start March the previous year. Can you see now? But it must be on the 1st. So make sure that you do that. If this was September, I'll say, what is the month that follows September? That month will be what? October. I will start on the 1st of October the previous year. Are we together? We only do this if I've got months other than what? December. Because December, obviously, it must be the same year. But any other month, it must be the previous year. Please do practice that. Now, they say, they give us the balances. They say the vehicle on the 28th of what? Of Feb 20. Can you see? They give us the amount, the cost of vehicle as how much? As 259,000. We need to be careful. This vehicle is given at the end of the period. Can you see now? So just know that this amount is at the end of the period. There is a possibility that this amount includes one of the vehicles which have been bought during the period. So we need to check that. But if there is no any other additions during the period, it will mean that at the beginning of this year, the vehicle cost was 259, and we also ended with a cost of how much? 259. Okay. They give us the accumulated depreciation, but can you see accumulated depreciation is at the end, beginning of our accounting period. Can you see now? This one we know that it is at the beginning of the accounting period. So if it had 28th of Feb 2020, it would mean that this amount will be at the end of the period. It means there would be a possibility of saying already they have included the depreciation for the year. But at the moment, I can see that this amount excludes the depreciation for the year. I hope that we are all following. Let's look at our additional information. The business acquired a second vehicle. Can you see? We acquired a second vehicle on the 1st of what? Of September. Can you see already? I know that this amount, because it's at the end, is already inclusive of the amount of vehicle that I bought. So the vehicle which we bought did cost us how much? 180. Can you see? So meaning this 180 is included here. So it means this is not the balance at the beginning. Okay? And it was purchased based on account. Can you see? If they say on account, it means it's on credit. So obviously in account equation, so if I buy the two accounts here will be the vehicle and the creditors control or accounts payables control. Okay. So now next time they can say this was purchased using cash. Obviously the two accounts will be the vehicle and the bank. At the same time, an air conditioner costing 3,000 was fitted in. Can you see now? So you need to check if this particular amount will be capitalized. Can you see now? So this is not a repair. This is like what? An improvement to the asset. Remember, if we've got an improvement to the asset at the end of the day, in other words, it will increase the earning capacity of this particular asset. So it means this amount of 3,000 will be capitalized. It means at the moment, the vehicle, which is the second vehicle, has been bought for 180,000 plus what? 3,000. I capitalize because this will increase the cost of the vehicle. The installation was done by the dealer at a cost of how much? Of 1,000. Can you see now the installation? Again, the installation need to be capitalized because it made this particular asset to be ready for use. Can you see now? So it means you need to understand the initial, recognition of an asset. Remember when you went through the basics there, you will see even with the standards, if you progress with your accounting, there's a way of capitalizing those assets. So all those costs associated with the buying of an asset, they need to be capitalized. Are we together? So at the moment, it means my cost of the new asset is 180,000 plus 3,000 plus 1,000, which is how much? 184,000. So meaning this 259,000 here already includes 184,000. Why? Because this amount was given at the beginning. Meaning when I started, the amount was not 259. The amount at the beginning was how much? 259 less 184,000. I hope that it makes sense. On the 28th of Feb 2020, the owner took the original vehicle. The original vehicle, it means, is the vehicle that we had as old at the beginning, the vehicle that is excluding the new vehicle. Okay, which was done by the dealer, and the cost. No, sorry. The owner took over original vehicle for 50,000. Can you see now? So this is like the business has disposed. Remember, when the business is disposing, there are various ways of disposing. The owner can either take the asset as his own, like in this case. Can you see now? We can sell the asset for cash. We can sell the asset on credit. We can trade in. We can donate. Can you see? You need to be careful. Next time it can be a selling price in the form of cash. But this one is what? The owner took it. Obviously, I foresee drawings. Can you see? But I'm still going to talk about those accounts. Okay. But they say no entry has been what? Recorded for this disposal, meaning we still have to record. Okay. The vehicles are depreciated at 10% per annum according to the diminishing balance method. Okay. No depreciation has been recorded. You must be careful. Remember, the asset can either be depreciated according to the straight line method or diminishing balance method. So you need to check the question thoroughly, because if you use a different policy of depreciation other than the one that has been given in your question, you will lose marks for that. Okay, we analyze. Now they say the following accounts correctly balanced and closed off for the entire year ending. Can you see? In other words, I miss it. So I just want us to open what? The asset disposal. Okay, so the asset disposal, sometimes they call it what? Asset realization. Okay, so remember, if you are being asked to open the asset disposal, please make sure that you follow the steps. Even if you can change the steps somehow, but those steps must still be there, because sometimes you can find that some people start with step number, obvious step number one, and thereafter some people step number two. Sometimes your step number two can be someone step number three. But let's just see what I'm gonna do. So what I'm gonna do first, the first step that we need to do, remember, we are dealing with the asset that we're disposing. Firstly, we need to have step number one. Step number one is where we what? Is where we remove the asset that we sold. Remember, if you are dealing with asset that you sold, so you need to take it out of the books because it doesn't belong to me anymore. But remember, they said we sold the original vehicle, meaning the one that I had at the beginning here. Can you see now? I can't use this because this is not at the beginning. If, let's say, for example, this vehicle had the 1st of March 2019, obviously this amount was supposed to be the amount that I was supposed to remove. So now I have to calculate and check how much is the balance at the beginning. So at the end, it was 259. And remember, during the period, we bought an asset at the cost of 184. So I just have to say 259 minus what? 184. So the balance of the vehicle at the beginning before I added a new one, it was how much? 75,000. So this 75,000 is the amount that I'm going to take out of what? Of my books. Can you see now? So I'll still come and talk about the accounts. I'm just showing you the steps for now so that when I record, it makes sense. Okay? What about the step number two? Step number two, we need to calculate the accumulated depreciation of the asset sold. It is very obvious because if I sold this asset, this will mean that the asset has been transferred to someone else. I don't have the ownership of the asset anymore. You cannot say I'm selling my vehicle and I keep my accumulated depreciation. You can't do that. So the accumulated depreciation is attached to the asset. So the fact that I sold the asset, it means I don't have that accumulated depreciation anymore in my books. So because I took off the asset, I must also take out what? The accumulated depreciation. But remember, the accumulated depreciation must be the total accumulated depreciation of that particular asset that I'm selling from the date I bought it till the date I sold it. So when did I dispose it? Can you see at the moment I didn't sell it, but I disposed it. So I disposed it at the end of what? Feb 2020. So it means I want to know the accumulated depreciation at the end of this period. Can you see now? As you can see, at the beginning, this accumulated of 14,250 is the opening balance for the asset that I'm selling, because at the beginning, the asset was only 75,000. So this 75,000 is accumulated depreciation is how much? Is 14,250. So it means I must take off this 14,250 at the end of the day. But because I sold here, I must first depreciate for the year so that I can know how much is the total accumulated depreciation. If the asset was sold here at the beginning of the period, this was the amount that I was supposed to take out from the out of my books. But because I sold at the end, I need to know how much is the depreciation for this period so that I can add it to the depreciation at the beginning of the period, which is how much? 14,250, to know how much is the total accumulated depreciation. This is how I will calculate it. I'll say 75,000 minus 14,250. Remember, here I'm calculating the depreciation for the year. But why am I minusing 14,250? Is because of the diminishing balance method. If the method was a straight line method, I was just supposed to say 75,000 multiply 10%. But because of the diminishing balance method, I must first less the previous accumulated depreciation. So I multiply it by 10% times 12 over 12. Why 12 over 12? Is because I had the asset for the whole year. So if I only had the asset for 3 months here, I was supposed to say 3 over 12. If I only had it for 1 month, I was supposed to say 1 over 12. So the depreciation for the year here will be how much? 6,075. But remember, I'm looking for the total accumulated depreciation. Therefore, I will take my 14,250 and I will add my depreciation for the year. And this is the total accumulated depreciation for the asset that I sold at the date of sale. From when I bought it long time ago, I don't know when did I buy it, but maybe I bought it 10 years ago till now. So that I accumulated how much? 325. Step number 3, I need to deal with the disposal value. Remember, I said the asset can be disposed in various ways. In my case here, I dispose this asset in the form of an owner taking over the asset as his own. So it means the account that I'm going to use here is going to be drawings. Okay? If the asset is sold for cash, the account will be bank. If the asset was sold on credit, the account will be debtors control. If the account was donated, it will be what? Donation. If the account was traded in, it will be what? Creditors control. So you need to be careful, especially when you go to the account. But here I'm gonna use, what is the disposal value? The owner took it for how much? For 50,000. That is the value that I'm looking for. You see, that's my step number 3. Step number 4 is where we have to calculate whether we made profit or loss. Can you see now? So sorry guys, here I was supposed to say profit or loss. I just put it, write it for me there, profit or loss, because I'm not sure whether I'm gonna make a profit or a loss. So I just missed it here, guys. Just write it for me. So what is the calculation of calculating the profit and loss? Obviously, the profit is the difference between selling price and the carrying value. Okay, so if you take the selling price and you less the carrying value, you either get profit or loss. Obviously, if your selling price is less than the carrying value, you're gonna get what? A loss. But again, the carrying value has got its own formula. What is carrying value? Carrying value is the cost less accumulated depreciation. Can you see now? So you can use this to check whether you made profit or loss. So how much is my selling price? My selling price in this case will be the 50,000, even though I didn't sell, but it's the disposal value. So you can write the disposal value here. So my selling price will be 50,000. My carrying value, I'll take my cost. What is the cost of the asset that I sold? The cost was how much? 75. I'm going to say 75 less accumulated. What is the accumulated for that asset? Is 20,325. So 75,000 minus 20,325 will give me the carrying value here. This is how I'm going to calculate that. I'm going to say 50,000 is my selling price, less in brackets, obviously I need my carrying value, 75,000 less 20,325, and I get a loss of 4,675. You see now? So here I was just showing you how to calculate. But at the end of the day, you need to know how to record in the books of account. So I'm going to show you how to record in the what? Asset disposal. But before I can go to the accounts, firstly, as you can see here, I've got the first step up to what? The fourth step. So to make your life easier, just know that as long as you are still following these steps, one account will always be obvious. You know one account already. One account will always be asset disposal or asset realization. So if I ask you what is the one of the accounts here, I know that one of the accounts here is asset disposal. One of the account asset disposal. One of the account asset disposal. One of the account is asset disposal. But you know that in account you must have 2 accounts. For example, step number 1. Remove the cost of an asset. So obviously I know one account already is what? Is asset disposal. But I can know the other account because they say cost of an asset. I will ask myself a question. What is that asset? That is the vehicle. So the 2 accounts are vehicles and asset disposal. Can you see now? The same applies to step number 2. The obvious account is asset disposal or asset realization. But what is step number 2? It says accumulated depreciation. Obviously, the 2 accounts will be accumulated depreciation and asset disposal. Number 3, the obvious account here is asset disposal. How did I dispose? The owner took over. Can you see if the owner took over, it means the 2 accounts will be drawings and what? Asset disposal. If the owner sold for cash, the 2 accounts will be bank and asset disposal. If the owner sold on credit, the 2 accounts will be debtors control and asset disposal. If the owner traded in, the 2 accounts will be creditors control and asset disposal. If the owner donated, the 2 accounts will be donation and asset disposal. So as long as you are dealing with asset disposal account, and you are following the steps, asset disposal will be the obvious account, and you must know the other accounts, but you can be guided by what the steps are saying here. Okay, so now I'm gonna go and record. Hopefully guys, these explanations make sense. Now the asset disposal, The first step, remember, the first step, I need to make sure that I remove the asset from the business. Can you see? I said the first step, we're going to record this first step. So if you remove the asset, remember I said the two accounts here will be the vehicle and asset disposal. Don't look at the asset disposal and try to understand under which side are you going to record under asset disposal. Asset disposal is a unique account. You cannot classify it as an income or expense. You can only classify the result or the result at the end and decide whether it's an expense or income. Because if you make a loss, it's an expense. If you make a profit, it's an income. But it's better for you to look at the other account to decide. So we said the two accounts here are vehicles and asset disposal. Just look at the vehicle. So if you are removing the vehicles, it means your vehicle accounts will be decreasing. And remember, the vehicle is an asset. An asset decrease on the credit side. So if I record on the credit side of that vehicle, it means when I go to the asset disposal, I'll go to the debit side. That's why if you can see here, I've got on the debit side here, can you see I write the dates are very much important, and I write what? The vehicle, because obviously the other account is vehicle. So obviously we record this in the GJ. And then remember, we only deal with the asset that we disposed. That asset, remember how it was how much? 75,000. Can you see that? So for me to be able to come here to the debit side, I was controlled by the what I recorded in the vehicles. Unfortunately, here I'm not showing you the other accounts, okay, because of time. So I'm just saying if this was in the vehicle account, under vehicle account on the credit side, you would see what? This amount. Asset disposal, 75,000. So when you bring it here, it comes to the debit side. Okay. Now let's go to. I'm gonna come back to the step number 2, the accumulated depreciation. Again, remember here the two accounts will be accumulated depreciation and asset disposal. Again, don't look at the asset disposal to decide on the side. Okay. You need to look at accumulated depreciation because I'm taking it out. And then obviously the accumulated depreciation which I have in the business for this vehicle will decrease. So accumulated increase on the credit side. For you to decrease it, you must go to the debit side of accumulated depreciation. You must go to the debit side of the accumulated depreciation. It means when you go to the asset disposal, it must go to the credit side. You see how does it work? This is that accumulated that I calculated for you there. Can you see now? So again, if you are writing exam, the cost here, you cannot record the accumulated here. No, you must always go to the opposite side. But that is just an exam technique. But I want you to understand, what if one day you decide to become a lecturer and you tell your student that if you record vehicle on the debit side, you must record accumulated on the credit side. Now you need to also explain to them why are you doing this. It's because obviously this is the lost value of an asset, so it must decrease the vehicle. Okay, guys, please, for more information, go and practice more. Okay, so this is how we recorded the accumulated depreciation. So if they asked you to open the accumulated depreciation on vehicle, on the debit side of that accumulated depreciation, you would have asset disposal on the debit side, this amount. Can you see now? Remember the double entry system. Okay, let me quickly go back to the previous slide. Now, step number 3, disposal. Remember again here, the two accounts, how did you dispose? The owner took over. The two accounts are drawings and asset disposal. Again, you must not look at the asset disposal to make a decision on the or about the side. So you must look at the drawings. Obviously, drawings are negative owner's equity. Where do drawings increase? On the debit side. It means on the debit side of drawings, I would record what? This amount of 50,000 and say asset disposal. So it means if I record on the debit side of drawings, it means when I go to the asset disposal, I must go to the credit side. Okay, let me quickly show you. This is how it will look like. Okay, you see drawings. Why do I put it on the credit side here? Is because under the drawings account, it will be on the debit side. Like I said, use the other accounts to make a decision. Don't look at asset disposal. You cannot say asset disposal increase on the credit side. It's not like that. You must look at the other account. The other account will give you the answer for it, for asset disposal. So under drawings is on the debit. Here it comes to the credit. Okay. So again, remember next time if you sold for cash, this was supposed to be bank, and this will change to be what? CRJ or CBR. If you sold it on credit, this was supposed to be debtors control, GJ. If, let's say, for example, you traded in, this was supposed to be what? Creditors control, GJ. If you donated the asset, this was supposed to be donation, GJ. Can you see now? And you put that value here. So after that, these are, as you can see, this is step number 1, step number 2, step number 3. Step number 4 is to check whether you made profit or loss. Obviously, we know already that we made a loss because I did calculate for you there. But again, you can calculate a loss by using the account. Firstly, which side is the biggest? So if you can check, if you add the two, they give you 70,325, and this side is what? 75. So 75 is the biggest side. That's why I put the total here. And remember, when you count, the biggest side must be the side. Can you see? I came here. Can you see now? And now I take this total of 75,000 and I minus everything here on the smaller side. So 75,000 minus 50 minus 20,325. I get, can you see 75,000 minus 2325 minus 50,000? I get a loss of how much? 4675. And again, let's say, for example, you didn't record, because already we know this loss because we did calculate from the previous slide. Let's say you didn't record, calculate anything before this slide. So you were supposed to say, okay, the difference is 465. Obviously, you can use this calculation. But when I say go and transfer, let's say I want you to go and transfer to the account that you're going to record here. Let's say you don't know that it's a loss or a profit. So can you see, if you go to that account, you have to transfer this 4675 on the debit side. Can you see that? And remember, expenses increase on the debit side. So the minute you go to the debit side, already you know that it's what? It's a loss on sale. Okay? But if this difference was there, and then obviously for me to decide, I'll say, okay, when I go and transfer to that account that I don't know, under which side will I transfer? It means I would go and transfer on the credit side. Profit is an income. All incomes increase on the credit side. So guys, hopefully this will make sense. And I just try, to help you guys. And, I know some of you are writing. I know about you, students, FAC 1502. I think, yeah, you are writing there. And then, yeah, some institutions you are also writing. Please, I like sharing. They also always say sharing is caring, guys. So, but please, man, let's help each other during this difficulty. So make sure that you share with others. Please recommend them to subscribe to my channel if possible. And let's help each other at the end of the day, guys. Okay. So if I can have time tomorrow, because I'm also having my own students that I lecture, if I can have time, guys, I'm gonna use the same question to show you how can you transfer this to the PPE note. You know that PPE note. I know this PPE note show many students flames. I'm telling you, flames, flames, flames. So I'll try by all means just to clarify everything, guys. And I hope all is well, guys. Study hard, and then I'm telling you, you are going to pass. Make sure that you study those books, eh? Make sure that you really, really study, and then I'm telling you, you're gonna win at the end of the day. Thank you very much, guys. Have a nice, nice, nice evening. Some of us are still awake, but yeah, please make sure that you study hard. Thank you very much, guys. Bye.